Tariff Tape Bomb Part 3. It's like a movie series. Is Black Monday coming? Let's get into it today with our daily SPY analysis and look into the weekend here. There's a ton to cover, and I am ready for a libation after today. Although we had a pretty routine start to the week with the gap down, and we just kind of grinded up all week, just like we did the week before after the Friday sell. So that's 3 in a row now. And I talked about this multiple times. There's a lot to get into here, but I talked about this multiple times throughout the week. Are they going to do the same trick 3 times? Because they've done that now with the kind of failed breakout. Let's use the futures so we can get a little bit better idea. There we go. With the up move, failed breakout attempt, and then a sell Friday, gap down, bloodbath Monday, bottom in the morning, grind back, little pullback, up Friday, tried to break out, down. A little bit easier to see on the 2, actually. There you go. So you can see that pop there, pop on the 2-hour. And then again, consolidation pattern, grind back after the gap down, reversal. I told you guys yesterday somebody was going to get trapped here, and it ended up being the bulls today. Now, a couple of things to go over. So we had non-farm payrolls this morning, which seems like it was like days ago, but it was actually just a few hours ago because we just got headline bombed all day long. But you can see non-farm payroll here. Just a doji, the dip was bought. Bonds actually got a really big bid initially because the headline number was way weaker than expected. However, the details, were a little bit more inflationary. Wages and stuff like that went up. I think the unemployment rate upticked just a touch too. But that wasn't really what moved us. What moved us was Michigan consumer inflation. And one of the better plays I've had in a minute here was on the VIX. And our dealer level worked out really well on that. And I think we've got a pretty good strategy going. It's been back tested plenty times. And this was a pretty good call on our end, picking up VIXY this morning, right before Michigan. Now, did I know that the number was going to come in like hot and consumers were going to be like horribly depressed? No, but I knew that that dealer level was right there. We pierced it at 15. And, if we were at 17 or 18 and that same number came out, the market would have probably fought it off. But it shows you how conditions matter here, and positioning matters too. And again, it's not a coincidence that the SPY closed right at 600, right? So, if we were at 600 when that came out, if we gapped down, it probably would have went the other way. IWM also, big dealer level for this Friday at, guess where? 226, exactly where we closed. So, these things are not coincidental. I think a lot of this sell had a lot more to do with VIX dealer positioning than anything. The headlines were just kind of a facilitator to get us, to where we needed to be or away from where we needed to be. And, that's really the end of it. Then we also had the tariff tape bomb at, right around 11 o'clock. Didn't really get walked back. It didn't really matter. I mean, we didn't really follow through that much on the sell. Like I said, it was just a 600. So for me, again, it's more about the dealer positioning here. Why? Because the second we pierce through 15, it's a pop. And we sold off really hard, allegedly. But, I mean, we stopped right at 600. So it's not like this was a panic blowout where everybody just gets crushed. They did stop it right at the dealer levels. A couple of things, though. Again, like I said a minute ago, they have shown you this setup 3 times now. People are catching on, right? It's all over Twitter. Oh, another Friday sell, another Friday sell. So people are conditioned to expect a huge gap down Monday. If we don't get that, where are we going to go? Or maybe we gap down, but instead of gapping down to 59.50, maybe we gap down to 6K and or 59.80. We retest this breakout on the futures. Maybe we have a higher low. If that happens, is it, do we squeeze up, or is it just not enough and people try to buy too much and we go down? So again, there's a rug pull coming, right? We're not just going to do this again and go back up and rally into Friday every week and then sell off Friday at 2 o'clock every week. We could gap up, we have a pullback now, right? We've pulled back a little bit. We filled out some of this liquidity. So that's a possibility too. I will say right now, again, I'm still going to defer to the trend. I'm hearing a lot of talk about, there's lower highs here on the daily. Okay, but so it just looks like a bull flag. So, there's really not anything saying that can't be a thing. I also talked about this yesterday. I said, despite being bullish here, I would prefer a little bit more of a retrace to reset what? The McClellan. And we're starting to get that on the daily. Now, if you look on the weekly, this is in the absolute basement. So, you know, -2 is really kind of like your no-brainer buy level. That doesn't mean we can't trade lower. You know, it can spike a little bit through that, but usually when that happens, it's, you know, you're seeing a big move off the lows. I mean, even here, like, and again, this was in a bear market. That's why it was able to overshoot so many times. When you're in a bull market, it'll go a little bit less. When it's in a bear, it'll tend to overshoot more. Obviously, for the pandemic, it just blew everything out. But, you know, even this doesn't look like much here, but that's a 400-point move, right? But in any case, Cullen's in the basement here, which means breadth is absolutely depressed. Banks still inching long into the Russell 2000, into RTY, and short NQ. So we'll see, was that just a hedge towards Amazon earnings? And it was just kind of left on there. So that's as of Tuesday. CO2s came out today. Who knows, maybe they'll start covering into next week. We have CPI. But that's kind of the long and short of it. That's the snapshot here. There is a little bit of risk into 595, maybe 590 Monday. We knew 595 was a level. Again, that would retrace into this area on SPY. Get, you know, 618 or so, 597. And then the 786 at 595, 594.32. So that would fully retrace that. So we'll see. Watch the McClellan there, and watch this upsloping trend line too. If we're backing off into CPI and we hit that, could be a level. So watch those areas. QQQ down 1.26 again. Still has higher lows on the daily. So does NQ, which I like with these higher wicks here. So I'm respecting that for now. But QQQ outside move. Everybody's favorite stock to take a dump on lately, NVIDIA, had a higher high close today. Now let me ask you what kind of candle this is on the weekly. That's correct. That's an engulfing candle. Gap below the low, close above the high. So be careful. Careful here, guys. We talked about this before. All it did was retest the weekly 50. Broadcom had a good week this week. Retest the 20. Goes off the highs today, but semis are not down and out yet. IWM, again, we were looking for a dip here. I said the 230 would probably hold. It is right now. Diamond, again, we touched 450 yesterday, pulled back. It's still technically in a good place. SMH down 1.3, but you know, it held 245 by the close, exactly. So keep an eye on this. IGV continues to be a powerhouse, although it did, yeah, it closed down today, but it was before, before Michigan. This was leading the tape, and it was holding the whole market up, thanks to everybody's friend Palantir, which closed down today, but not by much. Maybe a little bit of a tail candle there. And Microsoft, which was strong earlier, but closed down. I think Oracle, yeah, Oracle closing in. Adobe was up too earlier, came back in. But IGV, we knew 106, been telling you guys that for a month. That was a level, and it backed off there. So now bulls, you want to see a higher low here and somewhere in this area. Simple charting, simple TA. Transports, you know, kind of a, just look at the intraday, really choppy. So this didn't even respect any of the inflation data. In fact, look, it actually made a higher high after the inflation data came out. So again, I think a lot of this was dealer stuff here, which guess what? It usually is. China markets, which we don't really cover that often, but just since I'm right here, HK, look at that, nice breakout. ASHR also inching up too, or the CSI. But still looking okay. Interest rates here, 2-year yield popping. So that really got a good bid. So yield curve kind of flattening out again as the long end kind of remaining firm. I should say the long bond remaining firm, the yield going up. And we did negate that red bar. So I'm going to say the 2-year can go higher here. It's kind of a minor inside bar. It's not a huge one, but definitely strength there. I told you yesterday too that, in fact, I've been telling you probably for like 2 weeks that 90 would probably hold on TLT. It did. There is room for higher lows though. And my guess is we will put one in and go to 93. And then everybody's going to be talking about deflation again. But we'll see. XHB, this has been weak. So this took a hit here.
That's looking a lot more like lower highs. The only thing is be careful shorting home builders because they're in bed with the government. Be careful, but pretty good outside move. Technically, you could still make a higher low here, but obviously not looking good. VNQ held up well though, down just 30 cents. So this actually looks okay. This still is bull, has bull potential, but you got to get above that red bar high. Otherwise, it's still under pressure. XLF reversal. It did hold yesterday's low though, and you had. I mean, look at JPM yesterday. That was ridiculous, especially in the last hour or two. Like, look at that move, and it held the gains today too. I mean, it was down $1, but it held the gains for the most part. Goldman and Morgan Stanley just off of all-time highs as well. ARE was down, but it came off the lows pretty sharply. Did it hold? It held yesterday's low too. And looks like KBE may have closed just on it. Got a penny below. Broker dealers, nothing doing there. Still ridiculous chart. Volatility is great. Oil here up 49 cents. Oil, I just can't figure out oil right now. It is starting to trade back with yields again. I may write another article on the blog too if you guys want to check that out on this, but I haven't written one in a while. But there was a time where it was kind of diverged a little bit from yields right here, where it was going down, yields were up. Looks like it's back on track though. And so you could call 71 oil, we'll call that $90 TLT. So they should just go inverse to each other. But oil's been really, it's real shaky lately, especially with all these geopolitical headlines. XLE down a penny, XOP and OH down as well. I'm not doing anything with these right now, but I'm interested in pattern. CCJ up today, but these guys got to get out of. You got to get out of this inside bar. You got to close above that. Otherwise, it's bearish. Pure and simple. Got lower highs here too on the J. Excuse me, on the J. Nat gas, I did it again. Typed in 2.4. There's 2.3 down 2.7%. If it can base here, it can try to make another leg up. But it's still trending up right now. Got it. You got the green bar. That's how it's holding up. Dollar index got a bounce today. It was all over the map. Look at this intraday. Just a complete mess. And even on Michigan, it didn't really even pump that much. It kind of came. It looked like it was going to roll over, and then it pumped on the tariff news, and then it pumped again on more tariff news, I guess. But right now, it's kind of tightening, right? So I would say as long as this continues, I'll give the bulls a little bit more of a bias here on the dollar now because you got lower highs, but you now have higher lows. So as long as we're tightening, that can be bullish still. There's a lot of people talking about the yen right now too. It is down just a little bit here, but watch the dollar. If it gains too much against it. But right now it's tightening. But if this breaks down, it's heading into like 105, 106 area. But it lives to fight another day, especially on the weekly. But wide range here, a lot of volatility at the highs. That can be a sign of distribution sometimes. Gold here up 37 basis points, made a new all-time high today. This environment is really good for gold because it doesn't matter if we get inflation, and that means instability, and if we get easing, that's even better. Silver, I figured this would back off here. It did. This pattern is fine though. This can just base a little bit longer, and I think it's going to 38. Platinum down 1.3. Lower high there, plenty of room for higher lows. Palladium, a little bit weaker. So be careful with palladium, but I think there's some support around 950. And then copper, king copper here. This don't look like deflation to me. 3% gain. WV textbook. We called that out, and I didn't play it, but you could have played along if you wanted to. I mean, I think I even said that, look for the 618. That's usually the textbook WV setup. Probably should have played it, but commodities are tricky. I had some questions about FCX today. Yeah, that was up nicely. I think, yeah, a little bit of a level there at 36. Good weekly close there too. COPX. Come on. There we go. Yep, COPX up nicely. Nice W. All right, anyway, crypto here a little bit weak. So Bitcoin got to 100K, got above, and then it just dipped below. So Bitcoin's been noticeably weaker than the stock market lately. It did not make new highs when the market did. Not that it's like that, it was that far off, but again, it is tightening. Now, I will say next week, this 20 MA is catching up. Like it's there. Weekly pattern, there's no problems. That said, you know, the last time we based, it took a long time. We got to the weekly 20 MA, it bounced up, it put in a lower high, put in another lower high, and then it, you know, it took it months to break out. So just because the 20 MA catches up doesn't mean it has to go out. It just means that like it can, like it's no longer overbought, so to say. But still, you know, bull bear line 100K and then, you know, 91, obviously. Alts are definitely weaker. Ethereum coming down. 24 should still be pretty good with that trend line if we tagged it again. In fact, let's just do this now. Here, let me use an hourly so it's not messy. Yeah, I mean, like, look at your 618's at 24.29. So if we retest that, that's going to be a pretty good level, I think, for the short term. That said, not good to see it back off, but like, trust me, there's an enormous amount of demand here. So this is a bear pattern here, bear flag, right? And it failed. And then it went up and like ripped higher. So there's buyers here. And there's shorts that are trapped too. So it's not just gonna, I don't think we're just gonna break down and make new lows anytime soon. Even if it ends up doing it later, it's not gonna be now. But alt's still a little bit weak. Solana was green on the day. Failed bull flag though. Cardano a little weak too. This has a big tail candle though. But anyway, so nothing really doing on crypto right now. But markets here, we'll see what we get next week. We got CPI Tuesday. You know, for bulls, I think you want to hold like 590 SPY right now. I'll check the levels next week. And we'll kind of go from there. But we could, you know, just be careful. Like everybody's conditioned now to expect a huge gap down Monday. And if we don't get that, it's going to be interesting. We'll find out how many shorts there are in this market too. AAII, again, highest amount of bears since past, I think, November 2nd, 2023. So that doesn't necessarily indicate positioning, but it's a good idea. So we'll see what happens here. McClellan on the weekly in the basement. We're definitely close to an inflection point, I'd say. So anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to come find me on carnivoretrades.com. I will see you guys all on Monday.